Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarley. Great to have your company this Wednesday afternoon. And gosh, we've seen a bit of a sell-off in the last hour or so, particularly in these tech stocks. So that is sending the local market down by about 0.1% as we head into the match off. The S&P ASX 200 also down about 0.1%, 8,806. Life 360 certainly the biggest drag there, sinking by around 12%. So that's a little different to what we'd seen earlier. You can see those gains from between around, well, I guess most of the day up until about 2ish or so Sydney time, and that was a lot to do really with some of this mining momentum. So we had Rio Tinto move higher, MinRes the best performer on the ASX 200, and that was after it inked that deal with South Korea's POSCO to sell a stake in its operational lithium business for $1.2 billion. Analysts really welcoming this sale, saying that it will unlock significant value and strengthen its balance sheet. We've also seen Liontown Resources leap to its highest level since June 2024. Another focus for us today is some of these travel targets. We heard from Flight Centre saying that it is targeting profit to come in between $305 to $340 million before tax for full year 26. That would be anywhere from 5.5% to almost 18% growth on full year 25. Flight Centre saying they're seeing a pickup in business travel, particularly amid signs of a recovery to the US. They did blame deteriorating rates of travel to the US as well, of course, ongoing concerns in the Middle East and weak demand for corporate travel for their 10% profit slide in full year 25. I thought this was interesting on the same day that we spoke to Luxury Escape CEO Adam Schwab. You can find that interview on our website, ausbiz.com.au. They opened their first bricks and mortar store in Sydney today. Now, their Melbourne Chadstone store shows that people that come into the bricks and mortar store actually increase their spend almost fivefold, from around $2,000 on average when they're booking a Luxury Escapes deal online to up to $10,000 when they're in store. And of course, to pay for all those holidays, you need a job. We have all that jobs data coming through tomorrow at 11:30 Eastern Time, and we'll be bringing that to you. And of course, the implications for the RBA. I was at the UBS conference this week. It is pretty much a done deal from most economists out there that the RBA is at or near the end of their cycle, maybe only one more cut to come. Let's have a quick look at what we saw in terms of some of the sectoral moves today, and kicking it off with those lithium moves led by Mineral Resources, led by Liontown. PLS though down about 0.6%. I mentioned support in the miners, particularly Rio Tinto up 2.4% on the close to $132.79. Tech, though, is where we saw a lot of the weakness coming through, a lot of concern about overstretched valuations in the Mag 7 in the tech space in the US. Xero down 2%, NextDC Zip, and it really was Life 360 as well, down by some 12%. The banks, a little bit mixed. CBA continuing to fall after yesterday's profit update, down another 3.5%, weighing on the overall market. ANZ and NAB, though, looking good. I think ANZ's ex-div tomorrow. MinRes, of course, we touched on selling that 30% stake to POSCO. Aristocrat also had an update today. It did see profit from continuing operations up 9% for the 2025 financial year. Shares down 7%. Flight Centre, we mentioned, of course, its numbers, and total transaction value up almost 7% despite a reduction in headcount. ARN Media coming under pressure, the radio network flagging a sharp slowdown in the advertising market amid a lot of this economic uncertainty. And net wealth down around 0.8%, narrowly withstanding a significant protest vote against the board for its handling of the First Guardian Master Trust scandal. Let's get his thoughts on the day's trade, and welcome to the COB, Mark Gardner from MPC Markets.
Good
Hello.
afternoon.
What do you think happened in the last hour or two that just saw that sell-off occur?
It just seems to, I think it seems to be a bit of follow-on selling in the banks. We've had a bit of a pattern of that lately, where we've had a little bit of optimism on the open, and then it's sort of been faded into the close. But overall, I'm pretty disappointed with today, particularly because it was really only tech that was off overnight. There was a defensive rotation, which is usually good for our index. So the banks, and let's face it, the banks have done all the heavy lifting for a good 18 months. So It's about time, the likes of BHP and Rio started doing their fair share. So, I think that at certain stages it wiped quite a lot off the index with, and that result from CBA yesterday wasn't really that bad. It's more where the market's valuing it than anything else. I think Matt Commons maintained a pretty consistent rhetoric, and there was nothing majorly surprising out of it. So
just a reason to sell, maybe.
Well, take some profits at very high prices. So
yeah. What do you think about what we heard from Screw Turner for Flight Centre, and I touched on our interview with Luxury Escapes too, whether or not that's a sign of consumer sentiment upbeat too?
Well, consumer sentiment was really high yesterday, and look, and I do think that we see a lot of the negative press a lot, and realistically, I think Michelle Bullock's fairly justified, where she was pretty under siege probably 2 or 3 meetings ago, and really what's panned out is what she said would roughly pan out. So I think they were quite justified, and they were in a way a little bit cornered when they did the rate cut. If they didn't have an election coming up, they probably would have had the ability to wait, but they needed to sort of strike before it so it didn't affect the election, just in case the numbers were worse later on. So I understand the one and done. It'd be very rare to get one and done. But the numbers seem, the economic numbers seem okay at the moment. And look, the travel industry is really being, driven, I think, by the boomers and those that really, who are going to spend that decent amount of money at the top end of the market. They're not really being affected by mortgages. They're not really being affected by worrying about their job, because they've had 40 years of some of the best asset runs and asset prices in history, if not ever. So, they've got plenty to spend, basically.
Yeah, spending it on flights and cruises and all of that fun stuff.
Yeah, I mean, cruises have gone really well. And look, that sort of, I think we're at this stage with AI where, Flight Centre's got a cautious outlook on it, and I do get that in a way. I don't think the agentic AI within that space is quite prevalent in the US. I don't think it's necessarily that prevalent here. But what AI is doing is enabling people to have better experiences when they go away and write itineraries, etc., which, lugging around a lonely planet back in the day didn't really do. But you're probably getting more feedback on those local experiences, and which then people will have a better holiday and they'll want to travel more. So I think it will generally help the demand if people are having better experiences. So I think they've got probably that little sweet spot for the next year or two, where, or particularly someone like Luxury Escapes, etc., where they're fairly bespoke experiences, and I think wellness experiences were a very big, a very strong trend in the travel industry globally over the last years. So we probably see that continue.
I've got a whole bookshelf of Lonely Planets. I don't know if they're ever going to make me any money. But anyway, let's talk more about AI. I mean, you had the SoftBank Nvidia sell. You've got that depreciation call from Burry as well. There's a lot going on here. Yeah, look,
Michael Burry, it's a great story. The Big Short, it's a great movie. But he's not been very on the money for quite some period of time. But what he did well, in that GFC was he went into the detail, and this is a very similar thing where he's gone and looked at what they're depreciating, and it could, and I think he's actually right. They're basically saying these chips will have maybe a 2 to possibly maximum 3-year lifespan, but they're writing them off over 5 or 6 years. So they're carrying an extra nearly $200 billion on their balance sheets. For the end of town like Oracle, which has issued $30 billion in debt over the last 18 months, has got nearly a 400 or 500 debt to equity ratio. That'd be the stock that I'd be watching if they've filled their balance sheet with these chips and they managed to get a load of debt on it as well. But SoftBank selling, there's a lot's been read into it, but they've been one of the most bullish investors in AI and most aggressive. And when the bulls are selling, and there's a high level of insider selling going on at the moment as well, then we may be in for a bit of a correction. I don't think the theme, a lot of people like to do the comparisons to 01. these companies have got revenue. It's just not like '01, and I sort of even fell into the trap until that revenue started playing out.
Yeah.
And there's been a few studies where it's not necessarily being monetised at the actual customer-facing front at this point, but we have seen some decent results from Salesforce and ServiceNow, which do have those agentic models and a lot of software and they are starting to pick up in sales there, and they're at the pointy end. But I mean, whether it comes in time for a bit of a panic sell-off, who knows? But we just got our eyes on the technical momentum for the moment, because the fundamentals side, you can think of 100 different reasons to sell for about the last 6 months, but while that technical momentum remains positive, it's probably not going to matter. So when we get those payrolls numbers, now that the government shutdown's maybe finished, that could be another catalyst, but we won't know when we're going to get those for a while.
Hey, did you read Warren Buffett's letter?
I did not.
Question without notice.
No. But mainly because there's really no reason to look into Berkshire Hathaway at the moment.
I just wanted to chat in general. I just thought it was really wonderful. But we will park that then, Mark, because you didn't read it. But thank you, as always, Mark Gardner from MPC Markets. If anybody else did read it out there, please send me your thoughts on X. I thought it was wonderful, and of course, his retirement letter, quite lengthy, but very interesting. All right, let's get back to stocks then. And of course, we mentioned the stock of the day was all about mineral resources, and it's still with POSCO in South Korea. We spoke to Henry Jennings from Marcus Today, Andrew Weiland from DP Wealth Advisory.
It is a good deal, and it does value the business higher than the market is ascribing any value to. So I think this one will continue to push higher. Not sure how much higher, because it has run from $20 to $51, but certainly here it is definitely a very strong hold, if there is any such thing.
But generally, when you see the share price pops, then the gap needs to be filled. The share price comes off the boil. So today it's a hold, but if it was to slip back into the 40s, then I'd certainly be paying a very close attention to it, because you're seeing a lot of the shorts. That sort of short interest is really just being covered at the moment. So we just need to get that out the way first. So it's a hold for the time being.
All right, well, we mentioned there was a bit of wobbles heading into the close. Let's have a look at some of the leaders, though, of the session. We've touched on MinRes and also Liontown having a very solid session. Other winners included Centuria Capital, Karoon Energy and Super Retail with a nice near 5% pop. To the downside, of course, Life 360 being heavily sold off today, Aristocrat as well after its numbers, and Zip falling in line with the overall weakness coming through in the tech space, while Telix Pharmaceuticals and Temple & Webster also came under pressure. In the small end of town, these stocks had a good day. Star Pharma, Gallon Lithium, Stealth up 11%. To the downside were some of these movers, including, of course, we touched on ARN Media there, and also Caprice and Geo-Pacific Resources, along with Ionic Rare Earths. Now, Mark mentioned whether or not we do see finally an end to the US shutdown. There could be some data on mortgage applications, also Cisco Systems out with earnings. Tomorrow, a fair bit locally on the agenda. If we have a quick look at what is out there, October labour force data, of course, is the key one. GrainCorp's full year result and investor call. ANZ will be ex-dividend. Xero has its first half 26 earnings, and Light and Wonder to delist later in the US session from the NASDAQ, and will only trade then on our market. We are down 0.1% there on the CBO 200. Let me get you caught up on where the ASX 200 is finishing the session, and it has exacerbated its sell-off in the last 10 minutes or so. So falling below 8,800 points, down 20 points, 0.2%, 8,799. Life 360. The big drag there, along with the overall tech sector, and then of course CBA coming under pressure as well, weighing on the overall index. Well, we await to see what happens, whether or not the US government turns the lights back on. We will bring it all to you from 9:45 a.m. Eastern tomorrow. See you then.